Hi, I'm Philip Smith, financial planner with Tidepool Wealth Strategies, helping self-employed professionals and solopreneurs just like you cultivate resilience in your plans to retire well. This is the Financial Planning Podcast about money management, best practices for long-term growth, wealth building truths and fallacies, successful retirement strategies, and more, where I'll be sharing concise, actionable retirement planning guidance. Welcome to the Financial Flow. Welcome to episode 2 of the Financial Flow. I'm Philip, and today we're wading into the broad overview of financial planning as it relates to self-employed and small business owners like you. First, some perspective. According to a 2021 survey conducted by Charles Schwab, a reputable source, 33% of Americans have a written financial plan. Another survey conducted in 2022 by RIA Intel, which is a news and commentary outlet for financial advisors, came up with 23%. And they also found that nearly 70% of Americans at or near retirement age have less than $250,000 saved for retirement. So what exactly is financial planning? If you ask 10 advisors, you'll get 10 varied answers, but all will likely have something along these lines at the core. Financial planning is a roadmap for managing your money in a way that supports your life goals. Whether it's saving for retirement, investing in your business, or managing risk, having a plan helps you make informed decisions and stay on track. So let me give you some definition on what I believe financial planning is. Let's break down my planning perspective into the areas that I focus on with clients. First is cash flow. Working or retired, this is the money coming in and flowing out. Spending more than you make equals negative cash flow, and that's bad. Making more than you spend equals positive cash flow, which results in surplus income. That's good. This is the foundation. Knowing your numbers is like pouring concrete. If you don't know your income and expenses, nothing else works. Trying to create a long-term plan without knowing your numbers is like building on sand. The second area of focus is tax planning. Now, I'm not a tax professional and I do not give tax advice, but whenever we're talking about money, it requires an awareness of tax implications. How can you be more efficient with your dollars, not just today, but over the span of a lifetime? We help clients by developing ideas, and we work with your tax professional to ensure these ideas make sense for you. My third area of focus when it comes to planning is risk management. And put simply, this is a focus on trying to reduce or mitigate risks where possible in an attempt to protect your assets. But there are so many layers to this, and some of them overlay with other areas of planning. First and foremost, but not usually everyone's first priority, is estate planning. I'll elaborate on this first aspect of risk management, estate planning, and the many, many reasons for it in a future episode, and provide some ideas on how to get that ball rolling. But some basic estate planning is an absolute must. It's the idea that you want to prepare for the inevitable and make sure you have the right legal documents in place in order to ensure your wishes are carried out. Protect the business, protect your possessions, protect your loved ones. We love working with clients and estate attorneys to get this implemented. Now, risk management also means protection through building an emergency fund, through thoughtful and diligent savings. There's also the need for insurance, which is intended to financially help protect you and your family. And then there's an ensuing need to at least somewhat regularly assess whether the current insurance amounts are appropriate. Then, of course, we're also sitting down with clients and thinking through the appropriate amount of risk in an investment portfolio, which is a great segue into a fourth area of focus, which is portfolio management. Portfolio management is us helping clients grow wealth over time through smart investment choices, giving ongoing guidance and thoughtfully collaborating on diversification and what that looks like. It's important to note that all investing involves risk, including the possible loss of principal. There's never an assurance that any investment strategy will be successful, and even a well-diversified portfolio isn't going to assure a profit or protect against loss in a declining market. But investing, whether it is investing in your business or real estate or the stock market or anything else, is one of the best tried and true tools we have available when it comes to trying to outpace inflation with the long-term growth of wealth. Now, all of these areas come together to form a retirement plan, that roadmap to having enough saved to live comfortably after you've stopped working. For those just starting on a financial plan, whether you work with an advisor or try this on your own, here are a few good, simple steps to take. Number one, set clear goals. Define what you want to achieve financially in both the short and long term. Number two, create a budget. Track your income and expenses to see where your money is going. Third, build an emergency fund. Aim for at least 3 to 6 months worth of living expenses. And if you are in a financially comfortable place, make it a 12-month buffer. And then fourth, if you aren't doing this already, start investing. Even small, regular investments can grow significantly over time. Now, here are some resources that I've used or checked out or have at least had clients tell me they've had positive experiences with to help you on your journey. None of this is an endorsement, just to be clear. You can check out apps like Mint, though I believe that one is going away thanks to Intuit's acquisition. But from what I understand, they're rolling a lot of the budget functionality into Credit Karma. YNAB, also known as You Need a Budget, and Personal Capital for tracking and budgeting. I think NerdWallet also has something out there now as well. As far as websites go, Investopedia is a super informative and user-friendly website for learning about investment basics. Also, if you like to read or listen to books being read, check out The Millionaire Next Door by Thomas J. Stanley and William Danko. You could read Rich Dad, Poor Dad by Robert Kiyosaki. Debt is Slavery and 9 Other Things I Wish My Dad Had Taught Me by Michael Mihalik. And The One-Page Financial Plan by Carl Richards. These are all great literary resources that you could check out. Now to recap, financial planning is basically about setting goals, creating a budget, building an emergency fund, and having an investment strategy. We focus on cash flow, tax planning strategies, risk management, and portfolio management with our clients. These foundational areas are crucial for solopreneurs who want to ensure financial stability and growth. I do believe a podcast is most beneficial if there's something you can take away and put to work in your own life. So let's take action. I've got 3 action items for you today. First action item, this week, I challenge you to set at least one financial goal and start tracking your expenses. Remember, every small step counts. Second, if you don't want to DIY a financial plan, connect with a financial advisor who offers financial planning. If you've never worked with a financial advisor, you should connect with at least 2 or 3. That's my opinion, but as an action item for the week, connect with one. Take that first step. Third, get one of the books I mentioned. Read it or listen to it, whatever works best for you and your schedule. Be a consumer of content that will help you on this journey. I truly believe that becoming educated on a subject builds your confidence on that particular matter. Thanks for tuning in to this episode of Financial Flow, brought to you by Tidepool Wealth Strategies. Until next time, stay resilient and plan to retire well. It's disclosure time. This podcast is intended for educational purposes only, should not be used for any other purpose. The views depicted in this material should not be considered specific advice or recommendations for any individual, are not intended to be financial, tax, or legal advice, and do not represent Tidepool Wealth Strategies or Cetera Advisor Networks, LLC. For a comprehensive review of your personal situation, always consult with a financial, tax, or legal advisor. Neither Cetera nor any of its representatives may give legal or tax advice. Our office address is 450 Country Club Road, Suite 350, Eugene, Oregon, 97401. Securities and advisory services are offered through Cetera Advisor Networks, LLC, a broker-dealer, registered investment advisor, and member of FINRA and SIPC. Cetera is under separate ownership for any other named entity. Whew.